Okay, so what kind of situation do we currently have on gold? Now, in all this move to the upside, if you remember from our previous analysis, we spotted one candle which is not related to the move to the upside, which is this red candle here. Now, if during such a bullish move in the market, we have one candle which is red, it means that the market reacted to this zone, meaning that now here we have a very strong demand area for gold, and we definitely want to see the market go and test the zone to grab some liquidity at this area. So immediately by looking at the price action here in the weekly, we have identified a downside target in mind. Plus, if you remember in our previous analysis, what did we say? After this impulse, the market created a correction and tried to grow higher. However, then the market failed to go higher and created also this red candle here. Now, if you remember, I also spoke about this candle in a YouTube video. When you see a candle like this with a long wick, you want to see the next candle fill in the wick. This is a pattern that you see over and over and over again in the market. And in fact, that is exactly what the market did, basically creating the impulse to the downside that we wanted to see on the daily time frame, if you remember. So exactly what we wanted the market to do. And if you were able to capitalize on this wave to the downside, great job. But let's go back to the weekly. After the market creates an impulse to the upside, correction creates a higher high and then an equal low. What do we expect? We expect the market to make a move to the upside, create the regular head and shoulders, and then continue with the move to the downside. And in fact, after the market reached the equal low here, the market made the move to the upside. And now from here, we can expect the market to make the move to the downside. So immediately on the weekly, we have a lot of confluence for the move to the downside, and we have already identified our downside target. Perfect. Let's go down on the daily time frame and see what kind of situation we have on the daily. Now, on the daily time frame, situation is a little bit different. In fact, the market has created this move to the downside, so an impulse, correction, continuation to the downside, and higher high. So down, up, lower low, higher high. So a bearish W formation. After a bearish W formation, what do you want to see? You want to see the market make a move to the downside and go and test the previous resistance here, now turn support at this area, aka the neckline of the W formation, which is exactly what the market has done, right? The market went down and completed the pattern at the previous resistance, now turned support. So clearly here we have support, as we have already identified, right? Is the neckline of the W formation. But before, we already identified on the weekly that we have a downside target. So basically we have a bearish target, but we have a market that is currently at daily support. So how are we supposed to be approaching this situation if we want to be looking for a short? First of all, let's go and see what kind of situation we have from a COT perspective. So commitment of traders, what big banks and institutions are currently doing. Sorry, I have it on this other chart. What big banks and institutions are currently doing in the market on gold. So by looking at their orders, specifically the non-commercials, okay, because they are the biggest speculators in the market, we can gain an advantage over the competition. And what we can see that we had 408,000 long positions from an institutional perspective on gold. And during time, what happened? After that impulse to the upside during this consolidation period, what happened? So basically, during the creation of the head and shoulders, what happened? We have seen a clear decrease in the long positions that hedge funds are holding. In fact, we're currently sitting at 263K. So from 408 to 263K. And we can see this clearly reflected also in the net positions that went from 353K all the way down to 208K. Okay, so a strong decrease in the net position. So can we expect the retracement to the downside? Absolutely yes, because hedge funds are taking their profits on gold. Now let's go back to our chart, okay? We have already identified the daily support at this level. Now, until this level is holding, we cannot be looking for any kind of short because the market from here can and should actually make the move to the upside to continue to the upside, respecting the previous resistance turn support and completing the impulse correction and impulse pattern to the upside. However, if the market will actually manage to break below this structure, so if the market will actually show a daily close below the zone, at that point the daily time frame is in alignment with the weekly. The market will have created this minor information after an information. We want to see the market go for a retest of this level, so this previous support here turned support, sorry, previous resistance here turned support here, turned again resistance at this level. So the neckline of the information will simply be the previous support here that will be turned resistance because the market will have broken it to the downside. And that will be a key area to monitor. Why? Because at that point, all time frames are showing the same direction. Weekly and daily are perfectly in alignment. And as usual, monthly, weekly, and daily are for direction. The 4 hours is for entry. So how we will be approaching this market? We will be monitoring price action on the 4 hours inside of this area, waiting for the market to provide to us one of our valid entries with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. So if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.